Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden messages in corporate filings. And folks, today we are talking about Blaize Holdings, and let me tell you, they've got some interesting moves happening in their latest report. It's like they're trying to raise a whole lot of cash. So in this report, we're looking at Blaize Holdings, a company that's a bit of a player in the AI and semiconductor space, and it seems they've just made a significant deal to bring in a significant amount of money. This is their common stock, the basic building block of ownership in the company. And these are warrants, which are like options that give people the right to buy the company's stock later at a set price. Think of them as a coupon for future stock purchases. Blaize is calling itself an emerging growth company. This means they get a little breathing room with some of the reporting rules, kind of like a startup getting a pass on some grown-up regulations. Now we get to the juicy part, the really important stuff. Blaize has signed a deal with a company called B. Riley Principal Capital 2. This isn't just any deal, it's a big one that can bring in a lot of money. This is the core of the deal. Blaize can decide to sell up to a massive $50 million worth of its own stock to B. Riley. And here's the kicker. They get to choose exactly when and how much they sell. They are not forced to sell anything. It's completely up to them. Imagine having an ATM that dispenses cash for your company's stock and you decide when to use it. This agreement isn't just for one day, it's set up to last for a while, giving Blaize flexibility to raise money as they need it over time. The real fun starts after something called the commencement date. From that point, it looks like they have up to 3 years to use this money-raising ability. That's a good chunk of time to strategically bring in funds. There's a condition to selling shares. The stock price needs to be above $1 the day before they decide to sell. This is a pretty low bar, honestly, meaning they can likely use this facility even if the stock isn't performing spectacularly. When they do sell shares, the price isn't just the current market price. It's based on what's called VWAP, the average price over a trading period, but with a 3% discount. So they're giving a little bit of a discount to B. Riley to secure this funding. Now, there's a limit on how much B. Riley can own. They can't end up owning more than 4.99% of Blaize's stock at any given time through these purchases. This is a common move to prevent B. Riley from becoming too dominant a shareholder through this specific facility. So what's the money for? Blaize plans to use it to speed up their work on a big contract in South Asia and to invest in their new chips. This tells us where they see their future growth coming from. It's all about pushing their products out to the market and developing the technology that will power their future. Here's a key restriction. Blaize is pretty much banned from certain kinds of future financing during this deal. They can't do things like issue stock that has a price that changes based on the stock market's ups and downs, or enter into other equity lines of credit. This is to protect B. Riley's position and prevent Blaize from making deals that could devalue the shares B. Riley is buying. B. Riley is also agreeing not to short sell Blaize's stock. Short selling is when you bet that a stock price will go down. By agreeing not to do this, B. Riley is signaling they are a committed partner, not someone looking to profit from a potential decline in Blaize's stock price. As a thank you, or rather as part of the deal, Blaize gave B. Riley some free stock called commitment shares. This is pretty common in these types of agreements. It shows good faith and commitment from both sides. This section confirms that the shares being sold aren't registered with the public in the usual way. Instead, they're relying on an exemption for sales to accredited investors, which B. Riley clearly is. This means the shares aren't subject to the same public scrutiny as a typical stock offering. This is standard legal language saying this report isn't meant to be an advertisement to buy their stock, just a disclosure of the deal. Now, every company puts in these forward-looking statement sections, and it's basically them saying, we hope all this works out, but there are a lot of things that could prevent it. They are essentially laying out their risks. This is a big risk they're highlighting. Even with this agreement, they might not be able to get all $50 million. The agreement has built-in limits and conditions that could prevent them from using the whole amount. This reinforces the earlier point about the stock price and trading volume. If the stock price dips or trading volume is low, it could restrict how much money Blaize can actually raise through this deal. And here we have the list of exhibits, basically the actual documents that make up the deal, filed with the SEC for transparency. This is the main contract. This is just a technical file for the SEC systems, not something we need to dive into. And here's the signature showing the company is making this filing official. Dinakar Munagala, the CEO, is signing off. So let's break this down. Blaize is essentially setting up a safety net for future funding. They've secured a commitment for up to $50 million, which they can tap into by selling their own stock. This is often called an at-the-market or ATM offering, but this one is a bit more structured with a specific partner. It's a smart move for a company that might need capital for growth and development, especially in the fast-paced tech sector. They get the money on their terms, and B. Riley gets to buy stock at a discount. However, the risks are real. The total amount they can raise is capped, and the stock price and trading volume are critical factors. If the market doesn't support the stock, this $50 million lifeline could become a lot smaller. Also, their strategy relies heavily on successfully executing those big projects like the South Asia contract and new chip development. If those falter, the need for this funding and the value of the company could change dramatically. In my opinion, this is a sound strategic move for Blaize. It shows foresight in securing capital for growth. The key challenge for them will be managing growth and market perception to ensure they can utilize this facility effectively without diluting shareholder value too much. The success hinges on execution of their core business strategy. What do you guys think about this deal? Do you see Blaize as a winner here? Or do the risks outweigh the benefits? Let me know your thoughts in the comments below. And if you found this breakdown helpful, smash that like button and make sure you're subscribed for more deep dives into the world of corporate finance. Don't forget to join our growing Discord community. The link is in the description. Thanks for watching, and I'll see you in the next one.